This is Freightliner's flagship factory in Cleveland, North Carolina. Freightliner is a division of Daimler Trucks, the largest semi-truck manufacturer in America and one of the largest truck makers in the world.
There's something amazing about building a really large vehicle that's used every day by corporations to deliver value to the average American as well as to other companies.
Anywhere from about 95,000 to 284,000 new semi-trucks are sold in America each year. As of late 2022, sales were on track to end up on the high end of that. On average, a semi with a sleeper cabin can cost about $150,000. A fully loaded one can run above $200,000. These are the companies that dominate the U.S. market for them.
Every item that arrives at your doorstep has been moved by a truck. It's really the lifeblood that keeps American consumers happy.
Now, the business is going through a period of tremendous change. Truck makers are spending billions to replace fuel-burning diesel engines with battery and hydrogen-powered electric systems. There is also a race to build trucks that can remove the driver entirely, which could reduce costs and truck downtime. But a lot of this change is being forced from outside the ranks of the companies that have served this market for decades.
You can credit Elon Musk with making trucking cool. As polarizing as he can be, but they've had to respond because Tesla keeps pushing the envelope and Elon Musk keeps making big, bold promises that potentially could transform an entire industry.
Foul play has also plagued the industry recently. The founder of the once hyped hydrogen fuel truck maker Nikola Motors has been convicted of fraud, and the prominent self-driving truck startup Too Simple fired its CEO over improper dealings with a Chinese firm. Legacy truck makers, such as the more than century-old Daimler, are balancing keeping their particular and often extremely cost-sensitive customers happy in the present while investing in technologies for which there is no clear business case yet.
This is one of my favorite stations in the plant because this is where it actually starts to begin to look like a truck.
Heather Callahan is the Director of Logistics for Freightliner. Freightliner's North Carolina factory runs about 1.5 million square feet. It has made about 800,000 trucks since it opened in 1989.
You can see we are lowering the cab onto the chassis. Almost every 10 minutes, a cab lowers from the monorail and we marry it to the chassis. And every truck is spec'd to that customer's needs.
Freightliner was founded in 1942 and was acquired by Daimler Trucks in 1981. The company holds about 40% of the U.S. Class 8 truck market, mostly through Freightliner. Daimler Trucks North America also owns the Western Star truck brand. Truck makers sell their products through a dealership network, similarly to cars. However, in the U.S., cars are usually bought off dealer lots from a stocked inventory of vehicles and driven home that day. Semi-trucks are usually ordered ahead, and every detail is customized to the customer's wants and needs.
And our customers are very particular about that because many of them are extremely experienced in the segment in which they operate. They know what they like. They know what works well for them.
Freightliner trucks have tens of thousands of options: the length of the wheelbase, where the fuel tanks are located, how big the fuel tanks are, all kinds of engine options, countless options for the sleeping cab if there is one. Freightliner's paint catalog has more than 3,000 varieties of the color white.
This area of our factory is the cab line, and this is really where the interior of the truck starts to come alive. We start with just the shell of the cab, and from there we start to install the electrical components, the floor covers. We put in upholstery specified again to that customer. And as the cab tracks along on this line, we also install the windshields and the seats and the dash.
The truck is an extension of both a driver and a company's brand. So they put their name on this vehicle, and they do that very proudly. And the truck that they're running says something about their company, and it says something to the driver that they've hired to drive it.
Freightliner's parent, Daimler Trucks, pulled in sales of about $42 billion globally in 2021, a 10% jump from 2020. The North American segment pulled in $16.2 billion, a 14% jump over the previous year. Daimler doesn't break out how many units Freightliner sells, nor the number of Class 8 trucks. However, its North American unit sold 162,000 trucks of classes 5 through 8 in 2021. Class 5, 6, 7, and 8 trucks are medium to heavy-duty trucks that weigh 16,001 pounds or more. From 2020 through 2022, the conditions brought on by the COVID-19 pandemic caused freight demand to explode, while simultaneously severely limiting truck supply chains and manufacturing capacity. Since new truck inventories were so heavily limited, used truck prices skyrocketed to record highs. In 2019, a typical used truck about 4 years old would retail for about $50,000. At the peak of the COVID bubble, prices soared above $110,000.
Demand for trucks is, I would say, unprecedented. We've seen an incredible demand going through COVID and continuing well into next year. That demand actually exceeds our capacity, and it exceeds the capacity of the entire industry.
Industry reports in November noted that sales were declining from the record sales seen in September of around 55,000 units. The commercial vehicle industry is highly cyclical. Demand ramps up and then it tanks. The cycles are not necessarily predictable. Customers for trucks new and used are trucking companies, and they come in two basic types. There are fleets which are buying several trucks, sometimes even 100 or 1,000 at a time. As of June 2022, there were just over 1 million trucking companies in the United States. More than 95% of those companies run no more than 10 trucks. There are also owner-operators, independent truck drivers, who often own their own company and their own truck. These customers can spend as much as $200,000 or more on a truck, speccing it out and personalizing it to their tastes, with plush interiors, flat-screen TVs, and wood trim in the sleeping cabins.
Unfortunately, that's a small and probably shrinking portion of the industry, but it's the backbone. You know, that's the soul of the industry, is the owner-operator with a long and tall, chromed-out truck who spends a couple of weeks on the road, doesn't get home very often. Sometimes he lives in the truck, that is his home.
Large fleets make up the vast majority of truck purchases in any given year. About 90% or more of the trucks sold are often called aerodynamic trucks because they are built to maximize aerodynamic efficiency on the highway. These are different from some of the more highly stylized trucks, often sold by brands like Peterbilt that feature a lot of chrome and more classic designs. The four major truck brands compete directly with each other. Each has proprietary technology, such as in engines, that it can use to differentiate itself from competitors. Some brands do appeal more to owner-operators, such as PACCAR's Peterbilt brand. Navistar is owned by Volkswagen's Traton division. Volvo Trucks sells trucks under its own name, and it owns the Mack truck brand as well.
Freightliner is extremely focused on investing in the future. We are the #1 leader in the industry today, but that means we have to be prepared for the changing dynamic of the business environment with propulsion technologies for the future.
In 2022, Freightliner began delivering a production version of a full battery electric truck to its customers. The truck is called the e-Cascadia, a play on Freightliner's top-selling Cascadia truck.
We understand that diesel propulsion will be around for quite some time, potentially towards the end of the next decade. But regulations and different types of statutory requirements are pushing, rightfully, zero-emission vehicles, and we want to be fully prepared to be able to offer that technology in the marketplace.
While there are uses for fully electric trucks, as in last-mile delivery, some industry analysts are skeptical fully electric trucks can work in long-haul trucking. By law, the maximum a semi-truck can weigh is 80,000 pounds. Batteries for electric trucks can weigh up to 16,000 pounds, almost 1/4 of the total allowable weight. And that is weight that cuts into the amount of weight a truck is able to haul.
So it creates significant challenges economically for trucking companies, and they're not willing to sort of give up their ability to haul cargo and the amount of cargo they can have just for the sake of being carbon neutral or having electric vehicles.
Aside from weight, charging infrastructure remains an ongoing challenge. Semi-trucks have far greater charging needs than an EV that might be used by the typical household. A car might spend most of the day and night in the garage, to be used only a couple of hours a day for errands or commutes. Semi-truck, on the other hand, might be in operation for nearly 11 hours per day. Ranges on most of the medium and heavy-duty trucks available as of late 2022 are less than 300 miles. Freightliner's e-Cascadia has a maximum advertised range of 230 miles on a single charge. It takes about 90 minutes to charge the truck about 80%. A bit of an outlier, Tesla has said its Semi can travel 500 miles on a single charge. It began delivering its semi-trucks to first client PepsiCo on December 1st. Natso, a trade group for truck stops, and ChargePoint, a charging station company, have a partnership to build charging stations at more than 4,000 truck stops around the U.S. by 2030. That partnership is using $1 billion in public and private funding. Daimler has a $650 million partnership with BlackRock and NextEra to build zero-emission charging and hydrogen fueling facilities. The plan calls for a network of charging facilities on freight routes running along the East Coast and West Coast and in Texas by 2026.
Even if we invest in significant supercharging facilities, which are quite expensive, as much as $4 million, it means that if I leave an area that doesn't have a supercharger and I need to get topped up and recharged, it really limits the range of how far I can go.
That can't be solved alone by companies like Daimler. It has to be managed through the utility companies. It has to be managed through overall infrastructure for the states and at the federal level.
When you electrify an entire truck fleet, you basically need an electric grid that is capable of handling this electricity need. And specifically in the Netherlands, for example, there's a situation that initially it's very unlikely that the grid will be able to handle it.
Hydrogen fuel cells are touted as an alternative to battery EVs, and they do have some advantages. They can be filled up like ordinary gasoline fuel tanks while still being zero emission. Still, there is little hydrogen fueling infrastructure, nor a robust hydrogen fuel supply chain. The trucking industry is already known to be risky and volatile, and success requires a very cautious business model.
Trucking is a notoriously low-margin business operating really with a couple single-digit percentage in terms of profitability. So a trucking company may take in 3 to 4 cents for every dollar of revenue they generate. So because these margins are so paper thin, the risk appetite to go on and convert a fleet into an electric vehicle just isn't there.
With paper-thin margins, companies don't want to get burned trying out a new product that ends up having problems. In 2009, truck maker Navistar debuted a proprietary technology meant to reduce emissions from diesel engines. But the technology didn't work as expected. Navistar faced lawsuits, including a suit from the SEC, and lost about $4.7 billion between 2012 and 2016.
And so trucking companies are somewhat resistant to sort of go out and just be the guinea pig.
Autonomous driving technology offers a potentially tantalizing business proposition.
For the fleet operator, a truck is a sort of investing good. It needs to earn money. And when you look at the cost distribution for a fleet operator, roughly 30% of the total cost of ownership is represented by the truck driver. So getting the truck driver out of the equation is basically a big opportunity to earn money, to bring total costs down.
The further degrees of autonomy are more of a longer-term situation, mainly because of the regulatory situations, as well as the need to have somebody control the truck once it gets off the highway. You still need to have somebody alert in the cab at all times. And when you take that exit ramp off the highway, then a person will probably need to be in control.
These are unproven, untested technologies, and trucking companies don't have a whole lot of disposable cash.
The road to autonomous drive is clearly set. I think that is also something that every truck OEM is currently working on, either in-house or in cooperation with the third parties. Most of the truck OEMs have a roadmap to bring that in an early stage to the road around 2024, 2025.
Shippers aren't willing to sort of fit the bill for experimental projects. They're trying to contain things like inflation. And they've really been burnt out over the past 2 years due to all the supply chain disruptions that everybody just wants things to kind of work and be dependable and predictable. And eventually, and hopefully in my lifetime, we will see a conversion of EVs and more sustainable vehicles. But it's not going to be an overnight transition.